Equity, in the sense of a home, is the difference of the value in your home's worth and the amount of debt you owe on the home. So, with that in mind, we wanted to give you a brief overview on how you can use this information and cover the what, when, and how to use your equity from your home. Once you have the value of your home, you can determine the amount of equity you have available based on a few factors. One of those factors is the amount of the loan you have paid down thus far. Another can even be set up by the amount of down payment that you make. For example, if you purchase a $500,000 home and make a down payment of $40,000, then your equity is the same amount as your down payment, as it's the difference in the value of the home versus the remaining loan amount. As market values increase, having your home reappraised can help to increase equity as well. If you wanted to know your equity percentage in your home, you would simply subtract the balance of the mortgage divided by the market value from 1. Now that you know how to calculate equity, it's important to look at how and when to use it. When looking at how and when to use home equity, Bankrate provides 7 reasons to use your home equity. First and foremost, remember that equity contributes to the overall net worth, and so you do not have to use it. In the event that you do decide to use the equity in your home, you would need to apply for a home equity loan or cash out refinance. Both can be obtained from financial institutions that offer home equity products. If you do decide to use your equity in your home, think about what your return on investment, or ROI, would be for spending that money. A good ROI investment of the equity would be home improvements that can actually help improve the value of the home, or even using it to pay off debt. The major risk of taking out a HELOC type loan is that if the home's value decreases, you could end up owing more if you don't pay back that money on your equity loan. It can also then cause complications for your mortgage itself. Lastly, the financial institutions you take the equity out with will not allow you to borrow against the full value of the equity, according to Bankrate. According to them, they do instead is to allow you to borrow up to 80 to 85% of the value of the home minus the existing mortgage balance. The amount, like the mortgage, is also heavily dependent on your credit profile and income. We hope this presentation has been helpful for you. Remember that equity is the difference in the value of the home and the mortgage amount remaining. You do not have to use the equity that you acquire from your home, but if you do decide to use it, make sure it's a worthy investment.